Hi, this is Derek Hodges of Pointe Wealth Management. The map of Europe is being redrawn following the British vote to leave the European Union. What does it mean to your portfolio? Brexit is a political event and not necessarily a very significant economic event. It certainly does not pose a systemic risk like the collapse of Lehman Brothers did in September 2008. U.S. stocks are driven by the U.S. economic outlook and U.S. corporate earnings. While globalization has become a household word, in reality, compared to other countries, the U.S. economy is insulated from the world's problems. Spending by American consumers accounts for more than 70% of U.S. economic activity. In contrast, net trade with the United Kingdom plus the EU account for only about 2% of U.S. gross domestic product, according to an economist from Macro Insight Group. Brexit doesn't much affect the American economy. Most important, growth in the U.S. is looking good. Not gangbusters, but we're okay. We're at full employment and household income is rising. Housing figures have been strong, and this slow growth economy is likely to remain in place for the foreseeable future until the Federal Reserve Board decides to slow growth, and that could be years off. Brexit makes the Fed's accommodating approach to liquefy the economy likely to remain intact. While the Fed, in March, held out the possibility of an interest rate hike in June, Brexit is likely to delay any hikes in rates until late in 2016 or even into 2017. Markets don't like uncertainty, so even though the probability of a fundamental economic problem seems low, Brexit is apt to create some uncertainty in the days immediately ahead. The UK will need to renegotiate treaties with the Eurozone, and growing anti-EU sentiment on the continent may trigger more political changes. There's already been talk of Frexit and Nexit involving France and the Netherlands. Expect this to be a protracted political process, but it will be a political process. Investors over time adjust to new realities, but it may happen in emotional fits and starts. And further volatility would not be a surprise. Importantly, the market isn't breaking. There's been no panic. While markets were surprised, it's been an orderly sell-off since the vote. While past performance is never a guarantee of your future results, emotional swings and volatility are bound to occur in times of political change. A broadly diversified portfolio, the core of our strategic investment approach, is built to shield against changes in a single geographic region of the world or changes by any single asset class or any single investment style. What's most important, the S&P 500 as of June 27, 2016 remains only a few percentage points below its all-time high. Despite the Brexit surprise, the U.S. economic outlook for the rest of 2016 remains bright. Please contact us with any questions or to set up a meeting, and don't hesitate to share this video with people who might benefit from this information.